So we wanted to make a quick case study, a short one, on something to do with the stock markets. So Rashesh found a really good example. It's a company called Elcid, E-L-C-I-D, Elcid Investments. So if you look at it on Money Control or on Google, you'll see it's trading at around 10 rupees. But the real actual value of this company is close to a lakh rupees. Actual value is lakh, traded value is 10 rupees. Now remember, the rule is if you find a company whose traded value is below its actual value, you studied it, you know that the management is good, the growth prospects are good, everything is good, the company, and it's traded at a value which is lower than what you believe is the actual value, you buy it. Right? Warren Buffett style, it's called growth investment. Buy it at a low value because you know that eventually the traded value will meet its actual value as the market realizes what a great company this is. So if it's at 10 rupees but the actual value is 1 lakh rupees, why aren't people buying it? Imagine 10 rupees, you buy 10 shares at 100 rupees. 10 shares you have. When it reaches 1 lakh each, it becomes 10 lakh. Your 100 bucks becomes 10 lakh. There is no place to invest money where 100 bucks become 10 lakh in some time or even in a lifetime. So why aren't people rushing to this? Why have we not heard about this? But what's the problem with Elcid? Elcid is the company's market cap. I'm hoping most of us know what market cap is. For those who don't, market capitalization is how much is the company's worth in the market today, that if I pay, I get all the shares and I become the owner of the company. So the formula for market capitalization is equal to the share price multiplied by the number of shares in the market. So for Elcid, that is 20 lakh rupees. So that means if I spend 20 lakh, I can buy all the shares in the market and the company becomes mine. 20 lakhs. But Elcid has a 2.95% stake in Asian Paints. That 2.95% of Asian Paints itself is close to 4,800 crores. Even if it's just, so Elcid has 4,800 crores of shares in Asian Paints, but it can be bought in 20 lakhs. How is that possible? That is the entire case study. So no, it's not possible because the problem is something called circuits. For those who are already not new to financial markets, you all know what circuits are, upper and lower circuit. For those who don't, SEBI, the Security and Exchange Board of India, has done this to safeguard extraordinary amount of buying or selling of one particular stock. So what they do is, SEBI says, fine, I'm giving examples, okay, so the numbers are not always the real ones, just for example, simplicity sake. The price of this company cannot, in one day, cannot go up by 10%, more than 10%, or cannot go lower than 10%. So they keep like it's called a circuit break. So if it's at 10 rupees, it cannot go over 11 rupees in one day, or it cannot go below 9 rupees. Why? Because excessive trading in any form is not good. So SEBI's kept, for example, a 10% circuit. How does the price go from 10 to 11? When demand increases, a lot of you want to buy Elcid, it goes from 10 rupees to 11. Whoever's ready to pay 11 can buy. Whoever wants to pay at 12 can buy it at 12. But SEBI disallows it at 11, and if people sell it too fast, it disallows the price to fall in one day from 10 to 9. So that's a 10% circuit break. Okay. That way, depending on the stock, they can have 5%, 10%, 20%, whatever SEBI decides. Now think about it like this. This company is at 10 rupees. Literally in a day, the max it can go is 11 rupees. If it's a 10% circuit. Next day, 11 rupees, it can max to max go to 12.1, which is another 10% high. Imagine how many days it needs to go to reach a lakh. Because that doesn't happen, nobody is willing, first of all, the people who have the shares will not sell it at 10 rupees when they know they can get a lakh for it. The people who want to buy it are not able to buy it at the price which they are ready to pay because the market is not allowing the circuits are not allowing the price to go high enough that it can reach this value. So this is just a very different way of looking at the markets, understanding that these things also happen. People are ready to pay 15,000 times the price of this share, and the market is the only reason. The reason they've applied circuits is to safeguard, and that itself is currently backfiring for this particular company. In 2013, this Elcid had already told its investors that we'll give you 11,000 something per share, and they said no because they knew the value is higher. And now nothing. There is barely any anybody who's buying or selling, because who's gonna, if you have it at 10 rupees and you know you're gonna get 1 lakh, why would you sell it at whatever the market trading value is? You want to sell it at the actual price. So nobody's selling it. That's called, the volume, the frequency of buying and selling is almost negligible. Few which happened out of accident. So it's just now, it's right now in High Court. There is this thing going on where they want to remove the circuit. They're not allowed to remove it, but that's what's going on. So it's just a very interesting case that what can happen. I want all of y'all, whoever understands this, to please put in comments different kinds of companies which have such a unique, interesting reason as to why it might not be reaching the value it's reaching, or anything interesting that you feel is something that you know but others don't know, and it's really, really worth learning about. Please put it in the comments and let me know what else you think you require. Thank you.